Matt Justice here for Tackle Trading to bring you the Forex Report as we always do every Monday. However, it is Tuesday because I am overcoming some really nasty sickness. And so my voice is still kind of out there, and so I apologize for that. But you know what? Dedication, got to get that Forex Report out there. People are demanding it, and who am I to not give in to the demand out there? So we're going to do a quick version of the Forex Report. We're just going to go down the list here. Obviously, the first one we always kind of analyze is that of the dollar index. Last week we did call for a trade on the dollar index. We called for it on this breakout right here. Nothing in this movement here scared us off a little bit. So we're still in this movement on this on the dollar index. So the Forex Report is still saying it's an ongoing trade. Love the movement we're seeing today on the dollar index. The trade can still be made. We made the trade last week at, I believe it was, we were saying if you wanted to be aggressive, you could get it 88.27. If you want to be a little more conservative, you can get in there about 88.51. Currently, it's at 88.69, so you're up a little bit of profit either way on that, but still an ongoing trade, and we love the movement on the dollar index today. Good wide body candle, nice little bullish engulfing type candle. So we like that dollar index. It's a still ongoing trade, and we are targeting up here into the 90 area, as we said last week. Let's go down the list very quickly. Last week on the Australian dollar, just to kind of recap here, we did. It was coming back here, and I said, okay, if it does break down, we're going to call for a short Australian dollar. It did break down out of the 0.8550 level. It's currently at 0.8445. We're up about 100 pips so far on the Australian dollar. It's an ongoing trade. We're going to continue to stay in the trade as most of these trades at the Forex Report, most of these are just swing trades. So obviously the management of the trade is going to be different for everybody. Stop loss placement is going to be different for everybody. What my role in doing this is basically just saying what I'm looking at, what I'm doing, and I'm still ongoing in terms of the shorting of the Australian dollar. Good movement today. It broke down pretty good, and like I said, we're only up about 100 pips so far since we called that one, and that one is an ongoing trade here. Don't know if you could get into it now if you didn't listen to the Forex Report last week. It's already made a little bit of a movement, so your risk might be a little too high to get into that now, but you'll have to make that assessment on your own. The next one is the Canadian dollar. Last week we had a good, nice little movement when we were looking at it right here. It was a piercing line. We did call for it to, if it got up above 1.30, that would be a trade. I said basically I didn't know if that was a trade I personally would make. I didn't really love the retracement that it had last week. It went a little too deep for my liking. If you did make that trade here, more than likely you should have been locking in some profit when it double topped at the prior resistance level on an intraday standpoint at 1.450. So I'd probably, like I said, I did not make this trade, but if I did, or if anybody did, I would probably start to lock in profit today. I do like the movement today, but it's really struggling to get back up above there. If you want to long the U.S. dollar in this pair, it's USD, CAD. If you did want to long the U.S. dollar in this pair, what you would have to do is wait for it to break up above that level, and we'll call that 1.1460 is where we're gonna call that. It's got to get up above that level. If it gets above that level, it's breaking out of that resistance. It should continue to track up to the 1.15 and ultimately into the 1.17 level. Obviously, it's a pip, so it's 1.700 level. So that's kind of what I'm looking at on the Canadian dollar. I don't trade the Canadian dollar a lot. The most trades I make in currencies are on the yen, the euro, the Australian dollar, sometimes the British pound, and the Swiss franc. So I don't trade a lot of the Canadian dollar, but if I did, that's where I would get into it in that capacity. On the next one here, the Swiss franc. Swiss franc, last week we called for a locking in profit right into this level. It came back down, and what you're seeing here is a symmetrical triangle. Now, when it breaks out as it does today, that symmetrical triangle is a bullish breakout, and I like the movement on the U.S. dollar Swiss franc pair. I am calling right now for a breakout if it does get above this level right here at the we'll call it 9740 level. So if it gets back up above 0.9740, I am calling for a long US dollar Swiss franc pair. And like I said last week, it's a little bit aggressive, I would say, but a target of the whole number one might be a good target out there. Next one is the British pound. Last week we pulled off the dogs on the British pound right into this range. It was a low base, and it's still in that low base pattern. It's got to break it, so we're still kind of in that same formation. Last week, so we really didn't do anything with the British pound last week. It didn't break down in any capacity of that 1.56, and now you're kind of seeing why I said what I did. This level is the support level, and the traders know it, the high frequency traders know it, and it's just kind of hovering in that low base. If it does break out of the 1.560 range, I am calling for a short British pound. Obviously, I'm very bullish US dollar over the foreseeable future. And then here on the Japanese yen, let's go to the euro first. Once it wants to help us out and pull up. On the euro here, the euro, I believe we pulled off the dogs and called for a short if it breaks that support level right into that range. And so we're still kind of looking at that level right now. I'm not shorting the euro yet, very similar to the pound. So I don't know if I would do both of those trades, but if it does break out of this level, and I'll call that level at the 1.360 level. It's got to break that 1.360 level. If it does that, I will call for a short euro trade there as well. Obviously, economic reports can impact the trades, and you want to go to Forex Factory to make sure that you're assessing those economic reports, adjust stops as needed, lock in profit. Management of trades is really going to determine winners and losers in lots of trades, and so we definitely need to learn how to manage trades over time. We'll talk about that in the coaches shows, both the expiration party as well as the coaches show we have in about an hour from now. And then last but certainly not least, you have the Japanese yen. And what do I say? This might be my best call for a very long time. In the October 16th report, we called for a long dollar here. It was not that hard of a setup. It's just your standard 38% retracement coming in, slowing momentum, upward moving in price, starts tracking upward moving in price, and all of a sudden here you had a combination issue. You basically had the Japanese say we're going to get into the quantitative easing business, and the U.S. said we're going to get out of it. And lo and behold, tracks back up. And so this is an ongoing trade. I don't see it. I don't see myself stopping this trade anytime soon. I think it's a trade that's going to go at least in the 1.20 level right there, but I would not be shocked in any capacity if it just continues to go up from there. The Japanese are just doing their absolute damnedest to kill their currency. So we'll kind of see what happens there, but that is still ongoing, and that's going to be ongoing for me for the foreseeable future. If you're looking at a little shorter time aspect, this is a high base in this capacity, and it did break out of that high base. So still a tradable pattern, and still not too late to get into that. Sometimes it's easy for people just to look back and say, oh, I wish I would have been in that October 16th report and I would have got in at that point. Well, would haves, could haves, and should haves. And if you would have had a hot tub time machine, we would have had a lot of fun in history. But you can't go back. You can't live in the past. You got to look at it right now. And right now it's breaking out of a high base, and it should continue to go further. Hope you enjoyed the Tackle Trading Forex Report. I'll get this posted very soon. If you like it, leave some comments as well, and I'm sure we'll be talking about it during the Coaches Show as well as the Trading Justice podcast. So check us out there at www.tackletrading.com. For you members out there, look into that pro status, ladies and gentlemen. We're doing some great things over there. Gino Poor in his scouting report was 12 for 12 last week. If you would have made those trades, it would have paid for the scouting report for the next 3-4 years. And so let's start looking into doing that, and let us know over there if there's anything we can do to help you become a successful trader. Matt Justice for Tackle Trading.